Ethereum has outperformed even Bitcoin, delivering a 500x. If you look at Bitcoin's price, and we think it'll be at least 250,000 by the end of this year, if Ethereum price ratio gets to its 8-year average of 0.0479, that implies 12,000 per Ethereum token. If it gets to its 2021 high, which I think is justifiable given how much is happening fundamentally on Ethereum, that's $22,000 per ETH. But I don't think that's the ceiling. Ethereum becomes the payment rails of the future, and so its network value matches Bitcoin. Well, that would be $62,000 per ETH token. So with ETH at 4,100, as you can see, each of these three values represents tremendous upside.
Crypto investors are on edge, debating whether Bitcoin and Ethereum might face another pullback in the coming week. Despite short-term selling and leveraged bets, Tom Lee remains bullish, forecasting a parabolic run into the final months of 2025. Such pressure is typical when assets approach major ceilings, but stepping back reveals a bigger picture. Analysts see a historical pattern. Ethereum is experiencing its Bitcoin 2017 moment, surpassing $1,000 and finally drawing serious Wall Street attention. Like Bitcoin back then, Ethereum is attracting institutions, hedge funds, and major investors who recognize its real-world use cases beyond speculation. Meanwhile, Bitcoin continues acting like a high-beta risk asset. If markets rebound, it could climb alongside broader risk assets, though indecisive trading leaves short-term pressure a possibility. Currently, Bitcoin sits just above $108,000, down over 6% this month. On the ground, crypto adoption is expanding, from DeFi protocols to stablecoin infrastructure, while regulatory shifts may increasingly favor Ethereum, positioning it as a potential backbone for tomorrow's financial system. As Tom Lee emphasizes, this is likely just the beginning for Ethereum. With Wall Street involvement deepening and retail interest strong, Ethereum's growth story has significant room to run. The question now isn't if it will climb, but how fast it will write the next chapter in crypto history. Let's dive into Tom Lee's latest interview for his market predictions in the days and weeks ahead.
Well, the reason I think 2025 is the biggest macro shift since the gold standard is I got to take you back to 1971. And in 1971, the dollar went fully synthetic. That was the year that Nixon ended the convertibility of dollars into gold. Now think about that for a moment. In 1971, the dollar no longer represented anything except another dollar or a promise to repay. And when we think about that, most people said, well, gold was the trade in 1971. That's true, but it wasn't really the big opportunity. In 1971, the financial system had to suddenly think of ways to make sure the dollar remained dominant, because if the dollar wasn't convertible into gold, another currency could be dominant. And so what Wall Street did was they created a huge market for the dollar. Money market funds, futures, debit cards, mortgage-backed securities, currency swaps, interest rate swaps, index futures, zero coupon, CDOs, etc. That was the innovation that followed 1971. And in fact, 7 of the top 30 largest companies in the world now are financial institutions. What that means is that we now have a new moment in 2025, which is we now have more things becoming synthetic. And so that's why Bitcoin, of course, remains the OG in our view, because you now have a digital store of value. But I think you want to think about the other side of that ledger. What is Wall Street going to do? And in our view, Wall Street is going to play a very significant role in creating a market for digital assets. And in our view, the biggest winner here is Ethereum. So let's think about what it means for Bitcoin's upside. If gold today is at 4,000 per ounce, and maybe it'll get to 5,000 per ounce, well, we want to think about what Bitcoin's Bitcoin to gold ratio is. You know, what percentage of Bitcoin's network value should mirror that of gold. And if it's only at 10%, then you get a $140,000 value for Bitcoin. I think that number is too low. I think it's going to basically match gold's value or even exceed it. And that's how you get to the $1.4 to $2.2 million of value per Bitcoin. So we're still quite bullish on Bitcoin here at around 110,000. But let's think about this other story arc that's going to develop, which is Wall Street is going to innovate on the blockchain over the next 10 to 15 years. Okay? And part of this story arc is, and we've already seen it, is that we're talking about stable coins, which is tokenized dollars. So that's almost like the 1971 moment. But we're talking about tokenized equities, tokenizing credit, real estate, reputation, and eventually intellectual property. All things that are measured in the economy today. So a lot will happen on crypto. And we already know Ethereum has experienced this ChatGPT moment because of stablecoins. Here's just a list of different companies and entities that are building stablecoin projects. And you might wonder, why does the US government care about stablecoins? Well, it's the same reason the US cared about the synthetic dollar staying strong. Today, the US dollar is 27% of GDP, but it's 57% of central bank reserves. That 57% shows you that Wall Street's efforts to make the dollar the standard of transactions after 1971 was effective. It's 88% of financial market trades, okay? But it's basically 100% of stablecoin denomination. So by moving to a synthetic dollar tokenized on a blockchain, the dollar could become even more dominant. And collectively, stablecoins are the 12th largest holder of treasuries in the world. By the way, that's at about 280 billion of stablecoin outstanding. Treasury Secretary Bessent thinks it could be a $4 trillion market, but once stablecoins own more than 1 trillion of treasuries, they will become the single largest holder of treasuries in the world. It's not that far away.
Ethereum isn't just holding steady, it's starting to pull ahead. As 2025 comes to a close, Ethereum has outperformed nearly every major crypto asset, powered by record-breaking on-chain activity, a surge in developer adoption, and growing institutional interest. While Bitcoin remains the market's anchor, Ethereum's momentum suggests it could lead the next phase of the cycle, setting up what analysts predict could be its strongest run yet. At the same time, Tom Lee's confidence in the Bitcoin ecosystem remains unshaken. He predicts that explosive growth is imminent, as major institutions like BlackRock and other financial giants continue to double down on crypto exposure. According to Lee, this coming surge isn't hype, it's the result of years of data pointing to the same truth. Liquidity drives everything. By the end of 2025, Lee projects over 1.1 billion active crypto wallets, marking the fastest accumulation of wealth in history. In his view, crypto will emerge as the best-performing asset class of them all, reshaping the global financial landscape in ways we're only beginning to grasp.
Investors are a little cautious, but I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark, so I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, you know, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
Do you think it's at least changed the game in the near term for the market? The stock market's not going to take that well. I mean, you wouldn't think.
Yeah, I mean, Scott, the only thing that I don't know is how many chapters it's going to take to play out, because, you know, I mean, there's opacity, which is what is scaring people, but then there's real credit deterioration, which I don't think that's what's happening, and I think that's why Adam and all those had called it idiosyncratic. I'm kind of in that camp because high yield spreads have behaved. So I think it's more of is the flow of capital, because I think one of the biggest sort of allocations for alternatives has been private credit. It's going to make investors pause that, you know, maybe this market it's not as easy a return as it looks.
You told me, I think, a couple of weeks ago that 7,000 on the S&P by the end of the year was realistic. Do you still think that we could get another 5%? That's what it looks like. It's 5% between now and then. Do we have that in us?
Scott, I mean, 5% is just an average fourth quarter from 1950 to 2024. But we have the Fed easing after an extended pause. So that's 1998 and 2024. So I think that 5% might be the base case. I bet you it's going to end up being more like 7 or 8% or even possibly 10%. So I think 7,000 is the low end of what we can end the year at.
Wow. And how much do earnings have to do with that?
I mean, earnings are going to matter, but it's been a good start. I mean, we're barely into earnings season. The banks have been good. 82% of companies are beating. There's a lot more visibility of demand and then less concerns about tariffs because we're kind of working our way through it. So companies have a better sort of visibility over the next 12 months. I think the outlooks are going to be good, and I think that's going to help stocks. And I think there's a lot of room for multiples to still expand. So I don't think this market's that demanding.
I think it's interesting that you suggest that you'd be a buyer of regional banks and small caps. Why
Yes.
are you willing to do that? That's not putting your toe in the water. That's like putting the bathing suit on and jumping in. Why?
Well, I mean, Scott, I know there's a lot of muscle memory for people from 2023. And that was because of a big change in rates that really caught a lot of banks offside just in their business model. That doesn't mean that this crisis, which is underwriting being done properly, should have the same issue. So I think that there has been a throw the baby with the bathwater out on the regional banks and the small caps. So yes, I think despite the fact that the Russell had a rough week, I think they're really going to be one of the beneficiaries. I mean, even on earnings basis, small cap earnings are going to grow 48% in the third quarter. That's like 4 times, 5 times bigger than the S&P. So I think there's still a lot of growth left there.
What's the message in crypto right now, Tom? Bitcoin is down today. It's 107,000 right now. What's going on there?
I think there's a couple of things. One is there was a big deleveraging last week because that VIX spike and the tariff headlines triggered the biggest liquidation and deleveraging in crypto ever in history. So I think that people are still licking their wounds. And I think that there's also a bit of gold envy because, as you know, gold has been a huge performer this year. In fact, there's people waiting in line to buy gold. So I think that there is a bit of like, I'd rather own gold than crypto. So I think this is not the top of the crypto cycle, but I think levered longs in crypto are near record lows. So I think it's kind of like we're at the basement and working our way back up.
Where does this leave us? Ethereum has surpassed $4,000, navigated short-term volatility, and is now drawing institutional attention similar to what once propelled Bitcoin into the mainstream. Analysts are calling this Ethereum's 2017 Bitcoin moment, where years of groundwork are finally meeting global recognition and capital inflows. What sets this cycle apart is that Ethereum isn't just a digital currency. It serves as the infrastructure for decentralized finance, stablecoins, and entire application ecosystems, capturing the interest of both regulators and institutions. This combination of utility and adoption is why many see $5,000 and beyond not just as a target, but as an inevitable milestone. Over the past year, Ethereum has quietly outperformed most major crypto assets, a point emphasized by Tom Lee and other top analysts. Looking ahead, Ethereum's real growth story is still unfolding. With Wall Street stepping in, developers innovating rapidly, and adoption spreading across industries, Ethereum is positioned to become a defining force in 2026. Short-term swings may grab headlines, but the long-term trajectory is clear. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. If history is any guide, the current breakout may be just the opening chapter of Ethereum's biggest run yet. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.